Letter in our acronym CCIP, and we are talking about P. We're talking about the P. P stands for property types. Now, what kind of property types are we talking about? Well, in Southern California here, we probably have a few basic definitions. First and foremost, the standard property type is called SFR. Stands for single family residence. SFR. There you go. So, when SFR is a standard single-family home, what distinguishes the difference of a single-family home is typically a single-family home has no association fee. It is a home sitting in its own lot, it's zoned as a single-family home. You know what a single-family home is. It's not a condo. It's a single-family home. Now, take that standard single-family home and slap on a community pool, the community fee, an HOA fee. We would now look at what's called a title report, which is going to tell us that that property, which looks like a house, smells like a house, feels like a house, it's now defined as a PUD. PUD stands for Planned Unit Development. So it is a single-family home in a larger community that shares an association. That's basically what it is. So be aware that you may be buying a home that has an association fee and it may be recognized as a PUD. Is it a bad thing? No, it's not a bad thing. Just be aware that it is a single family home and the lender is going to define it as a PUD, a PUD. Now take that one step further, I should say. There are properties that have two homes on one lot. It could be defined under the title report as a duplex. A duplex can be done with a regular conventional loan and an FHA loan. Make sure that you understand that the purpose of all of these videos, I'm dealing with owner-occupied borrowers. That means the person's going to buy the home and the loan and live in the property. If you start looking at duplexes and triplexes and quadplexes, the borrower must be occupying one of those properties and living in it as their primary residence to receive owner-occupied rates, which are typically better than what's called non-occupying rates. It's a whole other conversation. Non-owner-occupied borrowers, which are people that are buying homes for investment properties, have to put a much larger down payment. This is dealing with just the property types and what to look for. Single-family homes. Single-family homes that look like homes, but they have an association fee, which is called a PUD. SFR, PUD. Single-family home, PUD. Now, you also have condominiums. You also have townhomes. Townhomes are very loosely defined because they can look like a single-family home, but have no front yard and backyard. They can also look like a condo, but again, checking on your title report will define what the property's legal description is. You can also get FHA financing on single-family homes, PUDs, as well as townhomes. A townhome is just another term. It could be labeled as condominium home, single-family home, PUD. Make sure you understand your rights, as well as the lender knowing what is on the title report. Bottom line is, what's on the title is what the lender is going to use. Now, let's talk about condominiums. Two types. There are condos, which were houses built, or condos that were built as condos, and there were apartments built as apartments that converted to condos. We call that category condo conversion. Very important to point out. Condo conversions may or may not be approved condominiums for FHA loans. Be aware. Ask your agent, ask the agent selling the property, is this condominium an FHA approved condominium? That is a condo conversion. You need to also be aware, looking at the condominium you're interested in buying, if that condominium is FHA approved. Now, what dictates an FHA approved condominium? Well, in the beginning, when they built the condominium, the builder, the lender, the original construction would have thought out the plan to get approved financing. That means FHA had a very stringent list on how to approve the project. So there were certain requirements. There's certain owner occupancy ratios. There's certain workmanship requirements on the property that require it to be an FHA approved project. So if you're using FHA financing, find out if the property is approved on the approved list, and your lender will find out for you. Your agent will find out for you. Your listing agent will find out with you. They will know if FHA financing is available. So do not assume that you can get an FHA loan on a condominium. No different than getting a conventional loan. Conventional loans have certain restrictions as well. Most of these restrictions, both FHA and conventional, are all about the condominium and how it was originally insured. Was it originally FHA approved? What is the ratio? Is this a condo conversion? What is the ratio of owners versus renters? All of these things come into play, and your lender will give you the list on what to look for, as well as the agent knowing if the property is eligible. Most condominiums, they're in California. You need a 10% down to go conventional. You can still use a 3.5% down payment with an FHA loan on an approved FHA condominium. So, we've covered single-family home, a PUD, a townhome, a condominium. We understand a little bit about a duplex, a triplex, and a quadplex. We also understand why it's important to understand the definition of the home. Now, sometimes you run into properties that have Mello-Roos tax. Typically speaking, PUDs and single-family homes have this. Be aware of that. Some developers, early on in the construction of the home, passed along the taxes of the development of the project. These taxes are called Mello-Roos taxes. They are in addition to your property taxes. Be aware, ask your agent how many years are left on the taxes, what is the tax rate, and how is it affected, because most likely you, the consumer, will be paying that in your monthly tax bill, or your quarterly tax bill. I'm sorry, you get taxed twice a year. So be aware how it affects your mortgage payment, because if you have a mortgage payment that's including taxes and insurance, Mello-Roos can affect that payment. That is the property definition. So a brief recap is single-family home. Be aware, no association fee, it's a single-family home. There's single-family homes, there's duplexes, there's triplexes, there's quads. If you're going to do any financing on that owner-occupied, you must occupy one of those units. Single-family home, most common loan out there for any type of loan. Second, PUD. Looks like a home, smells like a home, has an association fee. It's called a PUD, Planned Unit Development. Next off, condominium. Make sure and find out from the agent who's selling you the home or the agent showing you the home, is it an approved condominium? Is it a condo conversion? Does it allow FHA financing? Does it allow conventional financing? This really makes a difference in terms of a condo conversion versus a standard conversion or a standard condominium. It was never converted. Again, the difference, condo conversion was an apartment complex. It's now a condominium approval. Condominium never was a conversion. It's just a condominium project. Find out if either one of them have FHA financing available on them. We can talk more about spot loans and how to get spot approval FHA on either one of those properties. It's a very long process. You're welcome to send me an email at rjloans@gmail.com, and I'll give you all the details on a spot loan.